Hey everyone, welcome back to the channel, your number one source for income-oriented investing, and it's time for the monthly series for July. So it's time to go over the income landscape. This episode will be for Canadians, for the Canadian listed funds. A reminder from my American friends watching who don't invest on the Canadian stock market that the American or US episode will be out in a matter of days. So it's great to be back in Panama. I had a fantastic time in New York for 12 days. And by the way, if you're curious to look at pictures of our adventures, go on Instagram. My Instagram, you can follow us, passive_income_investing. I put all the stuff there. Of course, the highlight was definitely visiting Wall Street. Thanks to YieldMax ETFs, I got invited to be on a panel, talk about these ETFs. But I definitely have a lot of material. I met Mr. Einstein, that famous Wall Street guy. That was really fun. Participated in the closing bell. And of course, we took, a tour of New York. We went to the 9/11 museum, which was really, really fascinating, kind of sad. But I highly suggest it if you go to New York. The 9/11 Memorial Museum was really, really good. We went on a tour of all the popular New York mafia spots, all the old hangouts in the neighborhood, including this restaurant here where Lucky Luciano actually created the mafia in 1931. That was pretty crazy. John's, very, very popular restaurant. Was in The Sopranos as well. Pretty cool. Went to the most historic fine dining restaurant in the world, I believe, Delmonico's, for my birthday. This was absolutely crazy. This building, this institution, this restaurant opened in 1827, guys. It was really, really fun. Really cool. Had probably the best meal we've ever had in our lives here. Very, very expensive. Went to a old school diner that is the only place, 100 years old almost. The only place that serves Coca-Cola the old-fashioned way. I got myself a root beer float. As you could see here, and all kinds of other pictures. There's also the Blossom event as well. Met up with a few fellow influencers. So it was the first Blossom event in New York. Anyway, I don't want to bore you with this, but if you want to see our adventures in New York, it's all on Instagram. So moving on to the overall market. So as usual, guys, we're going to look at the overall market in the last month. We're going to start with the S&P 500, which is the best indicator for the US market. Really, really strong June. Up 4.8% in the last month. By the way, as you can see from the clock, or maybe my face is blocking it. I am filming this on July 3rd. The video will come out on Sunday. So S&P 500 on a tear in the last month. The NASDAQ 100, even stronger increase, up 8.52% in 1 month. Technology, guys. Technology is king, right? Canadian market, TSX 60, flat in the last month. Definitely underperforming the US market lately. If not forever, long term, it always underperforms. So yeah, the Canadian market, which is a lot heavier in cyclical sectors like financials and energy, is definitely underperforming the overall American market, which is more focused on technology. So now time to view the income landscape of the best, or what I feel are the top income-oriented funds on the Canadian market. And as you know, guys, I'm really going to focus on the more diversified options. These are the options. The diversified options are really what should make up the foundation of your portfolio if you're an income investor, in my opinion, right? They typically have all the sectors. So let's of course start with HDIF. So of course, I'd like to thank the sponsor of this video, as usual, Harvest ETFs, good friend of the channel. Massive news for Harvest lately, guys. This is extremely good news if you hold any Harvest Covered Call ETFs. So they did a press release where they announced multiple distribution increases for many of their ETFs. HHL increasing the dividend, which is the healthcare. HBF, big distribution increase. This is the brand's Covered Call ETF. HTA, of course, technology, big distribution increase. Even HUTL utilities increasing the dividend. Hubble, US banks increasing the dividend 8%. Leverage version of HHL, leverage version of the technology of HTA, leverage version of the utility one, also increasing the distribution. The biggest one by far is the HTAE, the leverage version of the technology Covered Call ETF, raising the dividend over 15%. Absolutely incredible. And the great news for HDIF, which is the ETF that I always mention in this monthly series because it's really an all-in-one where it has many of the Harvest Covered Call ETFs is also increasing the distribution by just under 5%. So this is welcome news. This is going to take effect with the July distribution, which is going to be paid out in August. So absolutely incredible announcement. Very, very positive from Harvest. Harvest is known for very, very steady and consistent monthly distributions, and they rarely get cut. I think just the energy one was the exception. They typically always they stay the same or increase. So this is phenomenal. Very, very consistent income provided by the sponsor, but also a good friend of the channel, Harvest ETF. So big news there for Harvest. Let's continue down the list. Of course, we're going to look at the Hamilton ETFs. They're two all-in-ones, HYLD and HDIV. So nothing new for HYLD. Same distribution as last month, which has been increased. And they did recently launched RMAX, and if you look at the HYLD composition, they did add a tiny position, just under 1% in RMAX, which is the REITs Covered Call ETF for now. So this could increase. Maybe it will, maybe it won't. Typically, when they add something to their all-in-ones, they do it gradually. So maybe it'll stay at 1% or 0.9%. Maybe they'll add a little bit more. I'm not sure. We'll have to keep our eye out in August when they update it again. But I'm not surprised that, my assumption was that they would add a small position in HYLD for RMAX and in HDIV as well, right? If we look at HDIV, nothing new in terms of distribution, but I believe, they did add a little bit of RMAX as well. You see 0.8%. Don't forget to check out the RMAX ETF review video if you haven't seen it. Right, do a deep dive into that ETF. It's a very simple ETF to understand. It is the only covered call REIT ETF trading in Canada right now. So moving on to Brompton, their all-in-one is BMAX. No news here either. Just chugging along here. Distributions have all been declared for a while here until July. So you see here a little bit higher than last year. They increased it this year, starting this year. Moving on to Global X. So you actually have several Global X covered call ETFs. I am looking at the leveraged ones here, all the leveraged ones, but remember they have non-leveraged versions. Just change the L to the C to a C. You'll get the non-leveraged version. So USCL for the S&P 500. QQCL for the NASDAQ 100, CNCL for the TSX 60 or the overall Canada market. We also have now EACL, which is the MSCI EAFE, basically developed countries outside of North America. So it's basically Europe, Japan, Australia, things like that. Is a newer one here. The first distributions I believe were, let me see here, were declared. I don't see them here. I guess they weren't declared yet, or maybe they're just not updated yet, but I believe they did declare the first distributions. EMCL, that's the emerging markets one. Do they have the distributions here? No, not yet. So these will have monthly distributions, I believe, right? These two, just like the other ones. And they're basically same type of strategy, same leverage amount, except it's on, it's an overall emerging market and an overall developed outside North America. Then you have EQCL, which is the all-in-one of all all-in-ones, which is just a combination of the 5 ETFs that we just looked at. And it's again, they declared a 21-cent monthly distribution. So stay tuned for these ones. I'm sure they'll update the website soon, but they will have monthly distributions, I believe, here, just like the rest of them. It would be very surprising to me if they don't. And also stay tuned because I am working on a video which will cover all these new Global X income ETFs in detail. Moving on to BMO's all-in-one ZWQT, nothing to report here. Same distribution rate of 8.5 cents. Yeah, nothing to report there. So these are, by the way, the non-leverage. We're moving on to the non-leverage all-in-one diversified versions here, ETFs here. Also non-leverage, very good ones from Evolve. You have ESPX, which is the S&P 500 with covered calls, and TSX 60 with covered calls. So very similar to, USCC, this one, CNCC, this one here, doing very, very well. And I believe no news on the latest distribution. Still a 15.5 cent for the S&P 500, and I believe 16 cents for, the TSX 60. So moving on now to the crypto. So you got BTCY and ETHY, not much to discuss here. No change in distributions. It's been, the same for the last 4 months. Same thing for the Ethereum one. Taking a little bit of a hit lately. Both ETFs are I believe, over 10% yield right now based on the current rates. Yeah, there you go. Moving on to closed-end funds now, everyone. Let me just make this bigger. Yeah, closed-end funds, of course. Crap. Give me a second here. Sorry about that. So I closed the EIT page by accident. So of course, when we're talking about closed-end funds in Canada, we got to start with the king, the biggest one, with almost $3 billion in assets. The EIT, Canoe EIT Income Fund. So this one, I can't believe it. I was always trading at a small discount, right? You see the net asset value here. You could pick it up for a little bit cheaper than its actual net asset value. Doing well, still 10 cents a month. I don't think that will ever change. Maybe it'll increase it to 11 cents. I mean, I think at this point they can because the NAV has just been going up and up and up. But I doubt it. I think these guys just want to keep it at 10 cents. Just like a lot of split funds have, a 10 cent, consistent 10 cent monthly distribution. This is not actually, it's set up like a split fund, by the way. It's a closed-end fund. It has preferred shares. It actually has two preferred shares, a B and an A and a B, which each give, my guess would be 10% leverage each. So EIT.UN is leveraged 20%. Quality stocks, right? You have the top 25 stocks here, all typical blue chip stocks here. You have the breakdown here. Financials and energy number one. So it has a more of a typical Canadian style, sector allocation. But it is 50-50. I mean, it's 50-50 here in terms of Canada and US. But of course, what really shines here is the returns. You see that in the last 10 years, over 10% annual return, which easily beats the overall Canadian market. Moving on to the Brompton Split Fund. So you still have a couple of them trading at discounts, everyone. GDV, very, very interesting. Trading at a discount. I mean, my opinion, GDV is the most diversified, well-balanced split fund of all time. It's my favorite split fund of all time. I have 100,000 in GDV. I came out with a video recently on GDV. I suggest you watch it, but it is trading still at a discount. As of July 2nd, you see that it's worth 1042, but the stock price is 1017. This is actually as of yesterday. What I like about GDV also is that the data is updated every day, whereas the more older school ones like DGS, LBS, SBC, and even LCS are updated only on Friday. So PWI is still also trading at a discount as well. It's worth 873. You could pick some up for 801. So definitely the real assets, utilities, infrastructure type stocks are undervalued right now. Even if we look at the Middlefield one, who has launched a new, and by the way, there's a recent video on this one. They recently launched their own infrastructure split share fund, brand new split share fund from Middlefield, is also trading at a big discount, just like PWI, right? It's worth 1417. You could pick some up for 1302. So I just wanted to point that out so you guys understand that. And don't forget that when it comes to split funds, the preferred shares, which is a very, very conservative investment vehicle, you have SPLT, which is an all-in-one for split fund preferred shares. This is my highly or most recommended ETF for cash parking, like a GIC alternative. You'll get 6% yield with a little bit of growth, and it literally has a portfolio of all the split share preferred shares in Canada. So very, very low risk. Fantastic ETF if you want to park some cash. Much better than a GIC, especially now when rates are going down, right? So moving on, move back to the Middlefield split funds. There is some news. So they, just like they merged CLP UN, a closed-end fund, into they converted it to a split fund. One of the remaining closed-end funds from Middlefield, the Middlefield Global Asset, this one here, RA.UN, is going to be merging with the RS Split Share Fund, which I love. And I did confirm with Middlefield that they will have a portfolio manager, someone available soon to discuss the merger of RA into RS. So if you own RA, a lot of you I know own RS, just like myself, have questions. Stay tuned for that Q&A, which we will discuss in detail. I think it's going to be a good thing for both parties. And by the way, speaking of RS, the discount is rapidly narrowing. RS is just going down and down and down. I think that real estate, by far, REITs is the most undervalued and the best sector to capitalize if you're an opportunistic investor. The discount or premium is narrowing. I believe it's under 20% now as of this date. So 11 divided by 965 minus 1 times 100. So right now it's at a 14% premium. It was 20 last week. So RS is becoming more and more attractive as an, if you want to get into REITs. Don't forget, RS has no office REITs, guys, right? I've been seeing a lot of stuff. It doesn't have no slate office REIT or any garbage like that. It has quality, mostly residential, industrial, and retail REITs. Quality stuff here. So, I can't wait to have that discussion with Middlefield, and I'm also going to talk to them about RS and REITs in general as well. I'll slip that in there. But definitely stay tuned for that video. If you are a RS holder, I know I've been getting a lot of questions about the merger, so stay tuned for that video. I'll give you the right information directly from the source, guys. So moving on to the Quadravest ones. These ones are annoying as hell because they don't get updated often. It's July 3rd. They're still 2 weeks behind. But I believe that DFN is trading at a discount right now, or close to it, close to break even. Could be a good time to pick up some DFN because they missed the dividend, which means people panic sell it, which means it's the best time to buy them, right? So remember, an investment in DFN is an investment in these stocks here, right? FTN, also a great pickup. I think it's trading on par or maybe on discount. Can't really know because the NAVs haven't been updated today as of July 3rd. Let me just refresh for fun. Let me see. No, it's still not updated. But still, trading close to its NAV here. So it could be a good pickup as well. BK trading at a premium, however. So that's it for the overall landscape, guys. Now, what sectors do I feel are undervalued? It's by far REITs and real estate. By far. And we know that interest rates has negative effect. Rapid increase in interest rate could have negative effect on things like REITs and utilities. And I just want to show you that if you're scared of RS, you don't feel comfortable investing in a leveraged product like RS, you should go with MREL, which is also managed by Middlefield, because check out these returns. Look at this comparison in the last 10 years. This is 10 years, everyone. You have MREL's return, and I just took the other three most popular index-based REIT ETFs, VRE, XRE, ZRE, you'll probably know them. MREL beats all of them in the last 10 years. So if you want to get in, if you feel like capitalizing and you're an opportunistic investor that wants to invest in REITs, you don't want to pick and choose your own REITs, go with MREL, the MREL ETF. This one has no leverage. It's not a split fund. But if you really want to capitalize, it's a fantastic time to add to your RS positions. I know I certainly going to do that this month. So when it comes to sector, by far, guys, it's real estate. Real estate takes the cake as the most undervalued sector this month, and even in the last couple of months, if not the last year. Canadian banks, maybe yes, financials, maybe a little bit undervalued, but they're picking up. They're picking up a lot. There's still Bank and BKCL, which are my two, personal favorite income-oriented options when it comes to Canadian financial because it's leveraged. There's non-leveraged things as well, like HMAX. If you're not comfortable with leverage, there's always HMAX from Hamilton. But I like the leverage versions. That's just me. I will probably be adding a little bit more to my bank position. I like bank because it's not just the banks. There's also the insurance companies and Power Corp, which, by the way, is the parent company of Power Financial, which is the parent company of Investors Group, Great-West Life as well. And by the way, they own Wealthsimple as well. Fun fact for you. So that's it for the episode this month. We're going to do this again next month. Remember, this is the channel where you get all your information, all your news on the income-oriented products on the Canadian market. Of course, I can't cover all of them. I cover mostly the diversified ones, but don't forget there's a million sector-specific ones as well. See you next month, everyone. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and U.S. stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.